Danielle, thanks for being with us. I do want to get your thoughts on what you're seeing as we do enter this spring season. Earlier this week, I spoke to the CEO of Compass. I spoke to the CEO of Invitation Homes. There seems to be this expectation out there that's going to be another strong year for housing, despite the inventory situation and rising rates.
Yeah, I think that's right. Our expectation is in line with that. We expect to see home sales continue to rise, but they won't be without their challenges. We still see low inventory in the market. Builders are building. We saw permits pick up this week in data from January, but we aren't seeing enough yet. Our recent research shows that the housing market is about 5.8 million units undersupplied relative to the household formation that we've seen over the last decade. So it's a big hole for builders to dig out of. And as they make progress, that's a step in the right direction. But we're still going to see competitive housing market situation as long as we have that huge of a deficit to work through.
And Diana, is there an expectation that as we do start to see rates rise, that maybe some of the heat that we've seen in home prices starts to come off and moderate at some point as well? Or is the situation such that the shortages are so tight that it'll continue to be an increase in prices in the hottest markets?
Well, it's definitely not like anything we've seen historically. If you look historically, prices usually lag sales by about 6 months. So you see sales slow down, then you start to see prices slow down. But as I said, this market is unlike any other because of that supply constraint situation and because you have millennials in their home buying years getting out there looking for homes, and they've had a lot of savings recently, and so they may have enough for that down payment even if it's higher. They're basing it on their monthly payment, not exactly on the price of the house. So as that monthly payment goes up because of higher mortgage rates, you will start to see them pull back. But again, I don't see prices coming down very much just because we still see bidding wars. And when you've got so few houses and a lot of people who want them, that puts a floor under prices. Also, as I said before, investors, they are really putting that floor under home prices.
Yeah, and in my town, Danielle and Diana, the real estate agents are calling and saying, do you know anybody who wants to put their house on the market? I need inventory. Danielle, what is your group's look at where interest rates are likely to settle for the most part this year?
Well, we do expect them to move higher. They've already moved so significantly higher, in fact, that if you look at what a typical mortgage payment is in January compared to just a month ago in December for the typical asking price home, it's $150 extra just because of mortgage rate increases alone. So they've gone from just over 3% to almost 4%, 3.92% in the latest data. We expect them to kind of settle in this area, 3.9, right around 4%, as we wait for the Fed's progress on monetary policy. I think the shift in expectations on how big of a hike they're going to make in March is really behind some of this adjustment that we're seeing in long-term rates. So I don't think we'll see this pace of increase continue through the rest of the year, but we do expect after some settling, maybe we see some continued gradual upticks in mortgage rates, but at a slower pace than we've seen recently.
All right, Danielle, thank you very much. Have a great weekend as the housing selling season kicks off. Diana, you too.